Hello everyone and welcome to the channel. So I posted this video not too long ago going over some real specific tips for car leasing. And I'll link it somewhere at the top so it'd be easy for you to find. And if you haven't seen it already, I definitely recommend you take the time to go watch it. And that's mainly based on the feedback I received from you versus my own personal opinion. Because if it was up to me, I would say go watch all my videos. And because of all the positive feedback, it quickly became one of the fastest growing videos on my entire channel. So I definitely want to take the time to say thank you for that, and it's very much appreciated. But I also noticed that one of the most frequently asked questions was regarding how your credit score affects the leasing process. And obviously I pay attention to the comments so you know what that means. Today we're going to be talking about leasing and credit scores. And I'm going to go over both scenarios with you. How your credit score affects your ability to get a lease, and how getting a lease affects your credit score. And if you're watching this video, I'm going to assume that you already know what a credit score is. But if not, I'll link a video in the description box that will go over what a credit score is and different ways of how you can improve it. So whenever you're in a situation where you're borrowing money for a major asset, your credit score would definitely always be a factor. And the same thing goes for car leasing. So the typical minimum credit score that most dealerships require is a 620. But it's hard to give you an exact number because everything can change from dealer to dealer and state to state. So just use that number as more of a ballpark figure. Now a score anywhere between 620 and 679 is known to be what's called an acceptable credit score. But anywhere between 680 and 739 is what's considered ideal for most dealerships. So just know if your credit score is 700 or above, you're in a really strong position and you'll probably get the best lease possible. However, if you have a score below 660, you still have a chance of getting the lease, but it's very small. And in my opinion, I still suggest you give it a shot. But if you do decide to go for it with the lease knowing that you have a low credit score, you have to understand you'll be paying more money up front and more money over the long run. And that's because car leasing companies use your credit score to assess how much risk is involved by loaning you money. Because essentially that's what they're doing. So your credit score plays a significant role in their decision-making process. So what the lenders do is reduce the potential loss by charging higher rates to people with higher risk profiles. Because at the end of the day, their number one concern is just, if I give you this money, what's the chance of me getting it back? So they look at your past to see what your history has been like with other lenders to see if you paid them back, to see the likelihood of them getting paid back. Another thing that a low credit score can do to you is it can reduce the chances of you getting the actual car that you want, because the options available to you may be dramatically smaller. So if there is a specific make and model that you have your eyes on that you want, you probably want to take the time to improve your credit score before even trying to get the lease. And if you're in a situation where you don't have a credit score at all, the lenders don't have any way to verify if you're financially responsible, so that just puts you in the same scenario as people with bad credit. It's unfortunate, but it's true. It's also important to know that even though a credit score is really important, it's not the only thing they look at when it comes to determining if you can pay back this lease or not. One thing they'll look at is your income, because your income determines if you can pay back the lease or not. So the more money you make, the better situation you're in. They also like to see people with stable employment history, so the longer you've been working at your job, the better it's going to look for you. They'll also look at your debt to income ratio, and that's just a simple formula of taking all your monthly debt and dividing it by your monthly income. And you'll definitely be able to find the debt to income calculator anywhere online. All you have to do is Google it. So the higher the amount of debt you have, the more challenging it could be to get approved. And believe it or not, leasing companies also check your driving record. Since they know the vehicle is going to have to be returned in a few years, they want people with good driving records so it increases the chances of the car returning to them in good standing. And they look at a negative driving record as an indicator that you're not going to take care of the car. Now, if you find yourself in a situation where leasing may be a little challenging for you because of your credit score, I do have a few options for you. And I have to be upfront and tell you, these are not the most exciting options, but they are options, so I'm going to give them to you. And the first one is just to simply wait until you can actually build up your credit score. And depending on what you have weighing your credit score down now, can give you a good gauge of how long it's going to take to get it to an ideal score. Next option is for you to have someone with good credit actually be a co-signer for you. And the reason this works is because it reduces the risk to the leasing company. Because in their mind, if you don't pay them, they know they can come after the co-signer because the co-signer is going to pay them because they have good credit and they don't want to risk messing up their credit at all. And then the last option is not common, but it is possible, and that's a one-pay lease. This is where you make all your lease payments up front in one lump sum. And I know it may sound crazy, but it is possible, and there are some people that actually do it. So let's say you're getting a lease for 36 months and your payment is going to be $500 a month. You're just going to take that $500 and multiply it times 36, and the answer you get is going to be $18,000. So you have to cut them a check for $18,000 before they give you the keys to the car. Because one way the leasing company can eliminate the risk involved in potentially not being paid back is to get all the money owed paid all up front in one lump sum. Again, none of these options are really attractive, but I'm going to give them to you because it helps get the job done. So that's everything on the front end. And when it comes to the back end, yes, a lease does contribute to help building your credit. Both buying and leasing have similar impacts on your credit score. So whether you acquire a car from buying or leasing, they both add diversity to your credit history, which positively impacts your credit score. And when you show that you're financially responsible with juggling and managing different type of loans, it definitely helps your credit score. And of course, making all your payments on time does have an impact on your credit score as well. So I hope this video helped. Definitely go ahead and leave a happy face in the comments section if you received any type of value, because it definitely helps the overall channel. Thank you for watching, and don't forget to subscribe for more financial content, and I will see you in the next video.